Hey everybody, this is Jim at SP500chart.com. It is a little bit before 10 o'clock on the 3rd of January 2013. I got back in a little earlier than I thought, so doing the video. Before we get started, just need to remind you as always that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I control lines on charts, but you have to draw your own conclusions from your own research, and you need to be making investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional, just a guy that draws lines on charts. So let's take a look. Well, I've drawn a couple new lines here, and I'm going to change the color of them. We're going to make them blue because we make our little pennants, flags, etc. blue. At least I do. You don't have to. Sometimes I'll just make something a color because it stands out. For example, if I look at this chart and I say, well, let me see. Oh, well, I can make something red because there's no bright red in this time frame. But anyway, basically, what has happened over the past 2 days is we have had a series of highs and potential lows that are following a little parallel set of trend lines here. Now, I need to remind you, as always, that when you're drawing trend lines on a 5-minute or a 10-minute chart, I mean, you can see here this orange channel really works nicely for 6 days. But when you draw those lines, you know they're not going to last for a real long time because they're operating on such a short time frame. And as we look at this, I want to show you a couple things. First off, the important thing is we've got this little parallel action going on for the past 2 days after that big gap up. Now, we've seen charts before where a gap up has taken place and then the market has kind of sold back down, oftentimes with the volume kind of drying up as it just kind of sags down a little bit. Then the volume picks up and it just takes on up out of that. And we say in those situations, we call that a bull flag. And we say that oftentimes the flag flies at half-mast. But in this case, what we have is a gap up, a rush of enthusiasm, and then just this kind of little melt up. And it's been my experience that most of the time when you have a gap and then a slowly rising flag, you're sort of taking the excitement out of the market. You're kind of, the market is kind of showing the people who made gains on that gap up that we're not really going to go up. Okay, so what happens is when you have a gap up and then it starts to slow down, people start to watch it and they say the first sign now, it's starting to come back down. I'm getting closer and closer to the level that I could have been at had I been in when that gap up happened. And there reaches a point where buying interest takes over in that slight selling pressure and the market goes back up. Now we have a gap up and now we still have some buyers here, but oftentimes when this bottom line breaks, it produces a fairly sizable move back down. I still think we will have support in the low 1440s. That's not to say that support is rock solid, but I think there is support in this area right here where we have these 3 trend lines kind of ganging up within about 3.5 to 4 points of each other. Likewise, I think we have resistance up here around the high 1460s to the very low 1470s. And we have a number of trend lines that should be resistance that are all kind of ganging up here. So going into tomorrow, I would watch this line. We've ended the day with a slight test of that line, but with that little bounce of what 2-3 points off of this line, that's not enough to say that's a bounce. We would have to get up to the low 1460s before I would say we're probably going to head on up to 1468, 1470. So basically right now, I still think this is resistance, and I still think this will offer some support. And this now looks like we may be forming one of those little rising flags after a gap up that generally produce a bearish outcome. I don't think it's going to be terribly bearish. I don't think we're looking at a total breakdown here, because we are above that 1444 and 1440 neckline areas that we've been looking at as being a possibility in a rather large inverted head and shoulders pattern. But you can see that here we had a double left shoulder, a pretty nice symmetrical head, and then we've got this little chopped off right shoulder that just bugs the heck out of me, because I don't feel like I can trust it that much, because we didn't spend much time over here building a base to support a good, strong, and healthy move to the upside. Finally, I want to share one thing with you. This just, I think, is kind of humorous, has nothing to do with the market. But you know, people talk about New Year's resolutions. I swear, I think half the world made a New Year's resolution that on January 1, they were going to start sending out more spam emails. I kid you not. Starting January 1, the amount of spam I have been getting has tripled. And it's been like that every day. So I hope you're not falling prey to that as well. But look, guys, that is the video for January 3rd, 2013. I want to thank you for taking time out of your evening here to watch this. I apologize for this for being just a bit late, but it's actually earlier than I thought. I didn't think I would be getting this thing done till midnight. So look, guys, take care. Let's see what the markets do for us tomorrow.